Rajveer Rolan here. I'm going to take a look at the Indian stock market and examine whether it is overvalued or undervalued. As you can see on the screen, the Nifty PE ratio is about 24, right? This is slightly down from the historical high it hit of 34. So every time the PE ratio crosses 30, and starts declining like this, the market tends to start correcting as it reaches an overvalued level. So, how can we tell if the market is overvalued or not? Looking at the P/E ratio, if you adjust and invert that, you get the earnings yield. That translates to an earnings yield of about 4%. Now you can add the dividend yield of about 1.2% and you get 5%, right? Now if you subtract the inflation rate, which is our CPI, which is about 4.25%, you basically get just about 1% return. So the risk-free rate currently in India is about 4.1%, which is the 1-year return on government bonds. So 4.1% is much more than the inflation-adjusted earnings yield of 1%, which you can see. So the stock market is definitely overvalued at this stage, right? So what do we do about it? If it is overvalued, can we bet that it would decline? Sometimes overvalued stock markets can stay overvalued for an extended period of time. So in this time, how do we invest in an overvalued stock market? So maybe we look at Warren Buffett and his investment methodology. Maybe a strategy like low price to earnings ratio combined with high ROE can get us in a stock specific picking methodology that will identify stocks that can get good returns even in an overvalued market. So these are my views on the short term nature of the market. But how do you value companies like startup companies like Zomato, Paytm, etc.? How do you understand that? So I was listening to a great talk given by Dr. Ashwath Damodaran in Stern School of Business, and he says for startup companies, the story is more important than the valuation. So find a company initially that tells you a good story, and if that story is bought by the investors, the company survives and can become very good, and then the valuation measures start to kick in. So this is my take on valuation.